FederalReserveBoardHomes.com. I'm coming to you today as your local Midtown realtor and real estate agent, bringing you market and real estate news that can benefit you in your everyday life. So, my topic for today is the federal rate increase. So the Federal Reserve Board just recently met and they decided to increase the rate by 1/4 percentage point, which means that that's going to affect you in possibly trying to get either buy a house, getting a credit card, student loans. It can affect you in several different areas. Why? Because it's going to involve how much you actually will be paying back over the life of any loan that you may possibly be getting. So the first thing I want to talk about is with this 1/4 percentage point increase, it's going to potentially increase your mortgage interest rate and what you will be paying. So if you have a fixed rate, this wouldn't affect you at all. But if you have, for people who have ARMs, which is just, an ARM is an adjustable rate mortgage. Basically, it's where your rate is adjusted, and it could be for for a length of period of time, because they have 3/1s, 5/1s, 7/1s, where it's fixed for 3 years. Then it fluctuates or it changes after that 4th year. So there are a couple of different ways that it can happen. I will tell everyone that I am not a loan officer, nor I'm not giving any financial advice in regards to being a type of financial advisor or financial representative. But I'm just giving you more information about exactly what is taking place in the local or in the market and the economy as a whole. So again, that interest rate can cause you to potentially have to pay a little bit more, or in regards to the cost of money, or you getting a loan in order to buy a house. So it's good to consider getting a fixed rate mortgage. And right now, the average fixed rate mortgage rate is about 4.15%. Now think about when the record lows were around 3.5%, 3.5%. So you're not that much, or not that far off from that. As well, it'll affect your adjustable rate home equity lines of credit as well, because they're based off of a prime rate as well, which is prime rate is just the interest rate that is set in the market as well. So again, with the Federal Reserve Board increasing rates by 1/4 percentage point, it just causes all different interest rates to go up by that much. As well, it's going to affect you with your auto loans. Now, maybe it's not as much with your auto loans because basically getting an auto loan, a person who has the better credit will get a better interest rate. But at the same time, you're still going to pay a little bit more, or your interest rate is going to be just a 1/4 percentage point higher than it was before the Federal Reserve Board met and decided to increase that rate. So think of it in terms of, let's say you bought a $25,000, you got a loan for a $25,000 car, $25,000 loan on the car, you would pay an extra $3 per month because of this rate increase. Credit cards, it's going to affect you again, as that 1/4 percentage point increase is going to cause you to pay just a tad bit higher in your credit card bill. So if you think about it, if you have $1,000 worth of debt or $1,000 credit in credit cards, then you'll pay $25. Expect to pay an extra $25 because of that, because of the increase. Lastly, with student loans. Most student loans are fixed. Actually, federal loans are fixed. Most federal loans are fixed rate loans, so you don't have to worry about it. But where you will need to watch out for is in regards to if you have private loans. A lot of private loans can have variable rates. So when they have variable rates, again, they go based off of, when things like this federal rate increase happens, this causes those interest rates on your private loans to go up as well, which can again cause you to have to pay back more money. So this is just kind of like a surface level view of how the Fed rate increase can affect you directly as a homeowner, buyer, as someone who's looking for credit, etc., etc. So hopefully this was some information that you can use to kind of help you think about the process that you'll use when it comes to your finances and using money. Again, I like to help people not just in real estate, but overall, so they can do better and make better informed decisions. Again, this is Ronnie Cole. I'm with RonColeHomes.com, bringing you real estate information that you can use. So I look forward to speaking with you again. Look for me next week for my next topic. Won't tell you that right now. I'll let you look out for that video. Have a great day.